So, folks, we had a new batch of economic numbers today that show clearly this economy does not need one more dollar of stimulus. And in fact, one of the numbers shows we have way too many dollars floating around and causing inflation already. So hold on to your seatbelts. I got some numbers. Despite rising prices, listen to this, consumers are buying and buying and buying. Retail sales for October that came out today were up a whopping 1.7% for the month. And get this, over 16% for the past 12 months. 16%. That is a very big number. In fact, it's a number that suggests all these wonderful folks buying everything are already stimulated, okay? Second, on inflation. Despite a steady king dollar, import prices nonetheless jumped in October by 1.2% or 10.7% for the year. That's 11% import inflation. Think of it this way. All that emergency relief money, $4 trillion last year, $2 trillion this year, maybe another $4 trillion coming. All that cash has gone into people's pockets. They bought out our retail store shelves and have also gone shopping in China. In fact, these emergency relief packages could have been labeled China stimulus. Now, we're going to talk much more later about the meeting between Biden and Xi, but import inflation is rising significantly. And let's not forget, a couple days ago, you had a CPI up 6.2% on the year. That's the biggest in 31 years. Now, rounding it out today, big increase in industrial production and manufacturing output, and this is unambiguously good. This is the supply side of the economy, especially investments in new business equipment to sustain the workforce, create jobs, productivity, higher wages. Business equipment up 6% for the last 12 months. That's a good number. Total production up 5%, another good number. Now, let me cut in right here and suggest to you, listen to this. The October-December fourth quarter could be a remarkable combination of 8% growth and 8% inflation, which would be a 16% increase in total spending in the economy. Those are remarkable numbers, but they're well in the ballpark, I'm telling you. Now, this would be a complete, utter inflation-prone blowout, and it would be reminiscent of the 1970s. That's what we are looking at. So, look at anybody that tells you that these Biden spending bills are necessary to help the economy is frankly out of his or her mind. And in fact, going back to yesterday's riff regarding Janet Yellen, we talked about her. She blamed a lot of the inflation on the pandemic-related shortage of goods. She said there's no problem with services, which, of course, is the largest part of the economy nowadays. So I went back and just took a look at the ISM, Institute for Supply Managers, service survey for October. And it turns out not only are services booming, but their prices are roaring. So get this, service inflation up 32% over the past year. And in fact, it's nearly identical to goods inflation, up 31%. Now, again, I know this stuff's a little boring with all these numbers, but numbers tell a story, and I love storytelling. As these data points come in, it is very clear that we are overspending, we are over money printing, we are overinflating, and, well, we are just over. So I'm going to come back to my point last evening. Remember, Janet Yellen says inflation will peter down in the second half of next year. I think she may be too optimistic, but let's leave that there. Senator Joe Manchin, my favorite Democrat, has been saying all spending should be paused until inflation comes down. So when you put the two together, BBB or other spending bills should be paused until next year's second half. And that, of course, coincides with the election. So I kind of see an economic romance here. Ms. Yellen and Senator Manchin make a lovely couple, but they have an important message. No new spending until at least the second half of next year. Economic romance. I kind of like that. Now, in the here and now, that means in terms of the House vote everybody expects on the spending bill later this week, You know what I'm going to say. Save America. Kill the bill. That's my riff. Nice and simple.